What's happening? This is Tom Mackrola at Bagaloans.com. I'm a mortgage loan originator. I do loans that people use to buy homes. And a lot of people, they come in contact with me, and the first question when they're applying for a loan is, what does my credit score have to be? What are you looking for in terms of credit? And while those are all great questions, because credit's a very important factor, it's by no means the only factor that we're looking for. If you're interested in credit, I've got tons of other videos on my YouTube channel which you could watch that have to do all with credit. However, today I want to talk about something different. It's called debt to income ratio, also known as DTI. Now, your DTI is also a very important factor that we use to qualify you for the loan, and I'm going to go over how we calculate that. So the first thing we got to start with is your monthly income. What's your monthly income? Now, if you have an annual income, let's say that you make $60,000 a year. Just for this example, we'll say $60,000. We take $60,000, we divide that by 12, and then that would be your monthly gross income would be $5,000 a month. So now that we have that, we look at the payment for the loan that you're applying for. In this example, let's say that it's $1,200 for your principal, interest, taxes, and insurance. That's going to be $1,200. So we take $1,200 monthly housing payment, we divide that by your monthly income of $5,000, and we get 0.24. So your front end ratio, or the top number in the equation, would be 0.24. That would be the front end ratio. Now we're going to look for the back end ratio. On your credit report, you have all your monthly payments that come back that you have to pay minimum due each month. So let's go over this. In this example, let's say the borrower has $400 car note, $200 in student loans, $100 in minimum payments on the credit card. That's going to be $700 plus that $1,200 for the housing payment, $1,900 total monthly debt picture. So we take that total monthly debt picture and we divide that by your gross monthly income of $5,000. So we have $1,900 divided by $5,000, and we get 0.38. So in this example, the borrower's debt to income ratio would be 24/38, which is a pretty good debt to income ratio. When people understand debt to income ratio and they ask me, where does my DTI have to be to qualify? I tend to say that you should start at aiming for 35/45 or less. I've seen files with 40 plus, over 50 plus debt to income ratios, but there's other factors that are in place, and it's not always the easiest to qualify with those ratios. Good safe spot, 35/45, that's what I recommend. However, if you want to calculate your debt to income ratio, feel free to hit me up, 312-561-7484. Be more than happy to take an application, let you know what you qualify for, and, kind of give you an idea where you stand. If you want to get in touch with me on social media, Tommy Bagaloans. I have Tommy Bagaloans on pretty much every platform: Facebook, Instagram, Snapchat, Twitter, YouTube, you name it, I'm on there, Tommy Bagaloans. If you're serious about buying a home, I'm serious about helping you. Let's get together. Let's make this happen. You can buy a house this year. Let's get started right now. 312-561-7484.